Today we're going to be talking about my simple approach to trading indices effectively, and in this video, if you stick around to the end, I'm going to be giving you some of my best tips that I know after I've been trading the indices for, well, about 7 or 8 years now. I've been trading these things for a long time. There's some things that I've learned that might be helpful to you, so make sure to stick around to the end of the video, hit that thumbs up button, let's jump in. And before we get into this video, let me just let you know that this video is also sponsored by Vantage. Vantage Markets offers traders the ability to trade so many different markets, everything from CFDs to things like indices, gold, currency pairs, cryptos, even individual stocks through CFDs. So if you have not already checked out Vantage Markets, there's also one other thing I should mention to you. There is a great sign-up bonus available to my friends who are outside of the United States who would like to consider Vantage Markets. There will be a link down below in the description if you'd like to check out Vantage and what they offer, so please check that out. Let's get into the video. So today we're going to be talking about some of the best ways that I know or tips that I've learned to better improve your trading when it comes to the indices. So today I'm going to be talking specifically about the US indices, which are things that I've traded for a long time. And there are some certain patterns that have emerged that I've noticed over the years of focusing on just a select couple charts. What I love about the indices, before we get too far into it, is that the indices encompass many different individual stocks. Now, we will talk a little bit about individual stocks in this video as it does pertain to how important this topic is, but what you have to understand about stock market indices is that they reflect a basket of many different companies. I'd like you to visualize here, and maybe on the edit will help you out. Visualize a basket and you're going through the store and you're picking out different items, things like Coca-Cola, or perhaps within this basket, there's also the keys to a Tesla. And at the same time, there's something you ordered off of Amazon. The point that I'm trying to make here is that you just listed off a couple of different companies, all of which could be included in the same basket of an index. Now, all three of those companies, Coca-Cola, Amazon, and Tesla, are all included in the S&P 500, as well as 497 other companies. Now, when you buy or sell an index like the S&P 500, you are making a collective bet for or against that entire basket of stocks. Now, what's interesting about that is that, as you might imagine, they typically, over long stretches of time, companies go up, right? Companies like Tesla and Amazon and Google and Microsoft, these companies make a lot of money. And so over time, they do typically go up. Now, that being said, there are also periods of time where business cycles are performing very poorly, and you see the opposite. This is a weekly chart in 2022 and late 2021, where we saw a pretty substantial pullback across the indices where businesses were not doing so well with the rising cost of borrowing due to higher interest rates and the lack of stimulus from the Fed. Here was 2020, where you see these very rapid declines on a weekly chart. This actually was a drop, by the way. Check this out. The S&P 500 in just a number of weeks dropped about 35%, which is a remarkably fast drop to lose 35% of company value across the board. Now, why am I showing you this? Well, we can keep going, and you can see in 2018, there was a big drop here. Now, what I wanted to get the point across when it comes to the first observable pattern when trading indices is they typically rise slowly and drop quickly. Now, if you're going to be somebody who trades the indices, especially if you're somebody who's going to be swing trading them, maybe you're focusing on like the 4-hour chart or the 1 hour, the daily chart, what you have to understand is that you need to identify which period of time you are in. If you are trading in the times when the market is dropping precipitously, trying to catch the bottom of that move is incredibly difficult to time. And if you're somebody who is, watching this market chug higher, the same thing for reversals. It is very difficult to try and time when this is going to end. So number one is that indices typically rise slowly and drop quickly, but over the very long term, typically trend higher. Now, again, there are times where you would go several years. Here's an example. If you had bought the S&P 500 and held it throughout this period of time, it would have taken you 721 days just to get back to break even. So to say that the indices only go up all the time is actually not true, even though sometimes it feels like that when you get these big breakaway moves. The reason I tell you that is because oftentimes traders make the mistake of looking at the recent price action and assuming that that's what's going to happen next. Because we've been in an uptrend, people might think this is just going to chug along and do the exact same thing going forward. But in the reality, when you look at the longer span of time for the indices, there are periods of, very nice movement, and then there are times of consolidation and even correction. So that's something that I wanted to point out. Now, how do you gauge which environment that you're in? Well, here's a simple way that I like to do. I'm going to just go ahead and grab a moving average here, and I want to show you this. So a moving average simple, I'm going to grab 2 of these. And with these indicators here, I'm just going to apply a 20, and I'm going to apply a 50. Now, I know this stuff is so simple, but just trust me when I say this can be a really simple but effective way to look at the indices. So I'm going to make my 50 moving average, well, we'll keep it, actually we'll make it red. So let's make it red here for this pinkish red. And let's just keep this on here. With our 2 moving averages, this is not necessarily like a holy grail system by any means, but simply applying these 2 moving averages gives us a little bit better of a picture as to what the current trend that we're in looks like. During this time, being long was the easy trade. During this time, shorting the market was actually the easier trade. And what you will notice is that when you use the 2 simple moving averages, what you will notice is that most of the time, not always, but most of the time, if you were to only go long when this is trending well, and only go short or look for potential short opportunities when this, when the blue line crosses under the red line, showing bearish momentum, then you'd probably be better off. So my point with showing you this is that typically, most of the time, indices are chugging higher. It's just that when they sell off, they can sell off violently and much quicker than when they rise. Again, take a look at what happened in 2020. Now, this was a bit of an anomaly because this was so exceptionally aggressive in its sell-off. But again, we are on a weekly chart, and you can see that the sell-off wiped out years of gains prior. Now, of course, it recovered, and that was thanks to the Fed sweeping in with large amounts of stimulus checks for everybody. And, by the way, that stimulus money led to this, multi-year kind of correction or consolidation phase on the S&P 500. So my tips for trading this is understand the momentum or lack of momentum that you currently have in the market, and make sure that you're not fighting against that freight train of a factor. Because again, many traders make the mistake of trying to call the top of when this move is going to end, or trying to call the bottom of when the stock market will start to rally. Now, because we're talking specifically about active trading here, that is my kind of my concept. However, I'll add a side note that if you're somebody who is more of an investor or a long-term swing trader, you may actually look at these as understanding that in the long term, indices may go up, and these could be nice buying opportunities as long as you're willing to wait for, a correction to work itself out, because it may take some time. This is personally something that I do as well as active trading. Is if the indices are dropping, I may look at individual stocks even and pick out some of the companies that I like best. In fact, we can actually look at what Vantage Markets has for individual stocks on MetaTrader. Let's check it out. So I've just pulled up MetaTrader so that we could take a look at how you can actually trade all of these things directly within Vantage Markets platform. I'm on a demo account here just because I'm a US client. Unfortunately, I can't trade with Vantage. If I could, it would be awesome. But Vantage Markets does offer non-US people the ability to trade CFDs for the NASDAQ, the S&P, the Dow Jones, Apple, Google, Microsoft, and I've just added a few of the many different symbols that you can actually trade stock CFDs with. Check this out. So if I go US equity CFDs, look at all these different names that you could trade. You could trade things like Nike, you could add that to your watch list. You could add even Shopify and Snowflake, some of these very hotly talked about names, even Tesla that we talked about earlier. In fact, let's look at Tesla, because Tesla's been having a really tough time. Maybe people don't love the Cybertruck. I don't know. I think the Cybertruck is kind of wonky, but it also seems to be rising in popularity, and I've never been the one to go to for fashion and the latest style. So what do you guys think about the Cybertruck? Let me know in the comments. Anyways, what I wanted to pull up here is that a lot of traders like to also dabble or watch individual stock names. And so, in the event that we do see a longer term, downward trend for some time, like if we go back to the weekly chart and talk about this period, the idea is that during this time, you can actually pick up some great individual names. Not always, and this could have lasted, by the way, it could have lasted much longer. But if you buy individual companies that you really like, this is something that I do in my trading, is I wait for corrective periods like this to go shopping for individual company names that might have gotten beaten down a little bit more than they should. So some of the examples might be something like Nvidia, which has been straight to the moon. I won't be touching this myself at these levels, but if we see a consolidation phase in the S&P and the NASDAQ, perhaps I could buy some Nvidia at a discount. Or maybe I'm watching Microsoft, right? So Microsoft, another company that makes a ton of money. They're super innovative and they've been around for a long time, game changing, the entire technology landscape. Google, same thing, right? Apple, these are companies that perhaps on a dip, I might go look at their charts individually. Now, I'm also showing you this individually for another reason. If you are looking at the indices, I think it's very important that you understand the weighting of these different individual companies and how they play into the overall indices. Now, you can even watch some of the individual earnings reports and news about some of the biggest companies, especially ones that are obvious ones like Nvidia, where the whole market watches everything that happens with them because it is an indicator for the rest of the stock market. If you're going to be trading the S&P or the NASDAQ, which is tech heavy especially, you should really pay attention to some of the individual companies that are the top players on the team, if you will, right? These companies that I have listed here, so all of them are very, very important to the overall market's health. And so understanding a little bit about their projected profits and understanding about how they work might be a really great thing to consider adding into your analysis. Anyways, the last thing I want to say when it comes to trading the indices is that, again, trend following for me when we're in a nice moving market is the way to go. When we're in a sell-off market, I wanted to add one caveat. If I am going to short the indices, it's usually for a short period of time, hence the name short, right? It's going to be a short-term kind of counter trend. Not counter trend, but actually with the trend move. So if the market is trending lower, then perhaps there is opportunity to short. But typically, I will do somewhat of an opposite move to my longs in indices, which is I'm looking to get in and quickly realize a profit and actually take profits off the table rather than let winners run as much as possible, because typically sell-offs are sharp, but then they fizzle out and they reverse. So when they happen, I'm kind of a believer of get your stop loss trailed into profit very quickly and let it run as much as it can, but be very quick to cut the trade if you're shorting against the market, because again, you're shorting against companies that do typically rise in value over time. Again, it's probably the easier trade is to let time pass and be long, but not always. There are also times where it is horrendous to be long. And again, 2022 was a great recent example of that. And if you looked at, the NAS 100, so if we take a look at the NASDAQ here, the NASDAQ during 2022, look at this drawdown that you would have had if you just bought and you just said, oh, I'm just going to buy the indices and hold them. You have to understand the environment you're in, because in this environment, you had a 38% drawdown on the NASDAQ. And that's the overall market. Individual companies, many of which like Shopify or Spotify or Carvana, many of these high-flying tech names that were so popular in 2021 lost like 70+% of their value in 2022. So be very careful with chasing the hype. I would say recognize and respect the trend that you're in, but be prepared to change gears if need be. I hope this video was helpful to you, and I just want to remind you that if you did enjoy it and you'd like to check out Vantage Markets, there will be a link down below in the description for you to check them out and see if they're a right fit for you. Thank you very much for watching. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.